Welcome to the BioWin Expert Talk podcast series. In this podcast, we will leave the floor to experts in the industry on specific relevant topics. Today we have Pierre Dumoulin, Grants and Incentives Manager at PwC, with us to talk about financing your ambitions. As a growing and/or highly innovative company, financing your ambitions may prove to be a challenging process. The landscape of funding opportunities is scattered across different government bodies and agencies, as well as across various types of incentives and instruments. During the PwC podcast series, you will be guided through the broad spectrum of relevant grants, incentives, and other financing solutions, both at the Belgian and European level, including the EIB financial instruments to finance your ambitions.
Next to cash grants, there are various tax incentives, broader tax incentives on a federal level within Belgium that are very interesting to look at when you're looking at financing your projects, but also, for example, lowering the financial burden of those projects. Without further ado, I wanted to, we listed a few that we wanted to touch upon. Amongst others, the copyright regime, the wage withholding tax exemption, and the investment deduction and tax credit. But let's just start right ahead with the copyright regime. The copyright regime, and I apologize for the amount of text on my slides. I think that's a habit of consultants that is something that we should look into. I'm very sorry. But copyright regime. The copyright regime provides, let's say, a benefit for both companies and employees at the same time. So concretely what it does, it allows a lower taxed remuneration for the transfer of copyrights by an employee to the company. The transfer of copyrights, as you know, is taxed at 15%, whereas a normal salary knows a progressive tax rate that can go up to 50%. So the idea is that the work produced by your employee or director, or as it says on the slide, independent consultant, is protected by copyrights if it's resulting from a creative activity. Employees are then often, in practice, transferring also those rights to the employer, and then in practical terms, applying the copyright regime results in a higher net salary for the employees at no higher cost than for the company. So this is, let's say, an interesting element. Now, it is advised to request a ruling on the application of this regime, specific to your case, of course, in order to obtain certainty. And next to that, also important is that the copyright regime in Belgium today is, let's say, subject to changes. We know that the current government is looking into strengthening, or let's say, making it more severe, but not demolishing it completely. So there are still opportunities for companies that are rightfully applying, or would rightfully so want to apply the copyright regime. This being said, the copyright regime, we also have the wage withholding tax exemption. Personally, one of my favorites, because I also work on them for some clients. The wage withholding tax exemption is actually a partial exemption of wage withholding tax on the salary of employees engaged in R&D. Basically, if you have R&D activities within Belgium and you have qualifying employees, what do qualifying employees mean? Those are people that have a scientific background and also a scientific diploma. So not, for example, economic sciences, but really the hard sciences, medical sciences, etc., that perform R&D. Well, an exemption can be made of, let's say, 80% of the normal wage withholding tax to be transferred to the treasury, can be, let's say, remained by the company, on the, of course, condition that that person has a right diploma and is doing the correct amount, let's say, of R&D. This results in a benefit for the company and not per se for the employee. And important here is that as from 2020, the tax authorities have also enlarged the wage withholding tax exemption to bachelor diplomas. Bachelor diplomas are, of course, capped to a specific percentage of the basis master's and PhD diplomas that you need to have. But indeed, as it says on the hot topics, what we also wanted to share is that it's not an incentive that can easily, let's say, applied for and then forgotten. We actually see, as it's a very popular incentive, we see that the audits from the fiscal authorities are, let's say, increasing, becoming more severe. So it is absolutely crucial, where before sometimes companies would not comply fully, but find a way to let's say manage it. Today, it's really important to have all the requirements met in due time, which especially means having the BELSPO updates done in due time, and also having, let's say, starting your exercise by presenting your program, your R&D programs to Belgium, to BELSPO, to Belgian scientific office. Now, this for the wage withholding tax exemption. This is an exercise that is done, of course, once a year, every year again, where we basically will update the projects at hand, but also update the percentages of each person working on those R&D projects, as well as seeing if there are additions in your workforce, etc. The next one is then not per se people related. It's the investment deduction or tax credit. Now, it's a super deduction of R&D investments from the corporate tax basis or the corporate tax liability, but a distinction must be made between the investment deduction and a tax credit on R&D. So the investment deduction can be applied in a one-off, or let's say a one-time 13.5% of the acquisition value of the R&D investments, or spread at 20.5% of the tax depreciation of the R&D investments. Important is that the investment deduction can be carried forward here, but that there's a main difference between the percentage of one when you apply it in a one-off structure or when you apply it in a spread structure. So your basis is either the acquisition value or the depreciation. Now, the tax credit then is an alternative to the investment deduction, and the tax credit corresponds actually to a deduction of R&D investments multiplied by the taxable rate, which is today in Belgium 25% for companies. And in case you would dare not be able to use, let's say, the tax credit, because, for example, you are not yet in a profit-making position, the unused tax credit can be carried forward for the 5 taxable years, and if then still not profit-making, paid out to the company. So this is an interesting element, of course. Now, you might wonder, for what R&D investments can we apply the tax credit or the investment deduction? Well, qualifying investments consist of tangible and intangible assets linked to an R&D center. So we have material, we have personnel, organizational structure, etc. We have also patents. But also there it's important that you are talking about new patents and not patents that you have laying around for a few years already. And important is that those investments, of course, may not have a negative impact on the environment. This needs actually to be underwritten by a certificate of the regional government body. So if you are in Wallonia, you will hand in your request with the Walloon government, and they will actually grant you, let's say, hand you a certificate underwriting that you are not impacting the environment, which then allows you to apply the investment deduction or tax credit. A more difficult one sometimes is the innovation income deduction. Under this regime of the innovation income tax deduction, the income deduction, 85% of the net income stemming from innovation can be deducted of the taxable base. The IID or innovation income deduction, or in French known as the DRI, déduction revenu d'innovation, results actually, let's say, in a tax rate being reduced by 3.75%. Here, very important is time, as the IID can be applied as soon as the patent application is filed or the eligible rights arises. So if you do not want to miss out on the potential benefit, you need to, of course, make sure that you are there as of the start. Now, this being said, what is considered eligible intellectual property? As you see on the left-hand side of the slide, eligible IP are patents, copyrighted software, breeders' rights, orphan drugs, and data and market exclusivity. The qualifying income then consists of embedded license income, IP infringement compensations, and capital gains. The expenditures that are also needed consist of those expenditures directly linked to the innovation. So with some exceptions, of course, but also the costs of external R&D needed to come to that innovation. An important element, or why am I stating those elements, is the calculation of the IID. And a very important element is what you see in the fourth pillar is the nexus ratio, where we actually need to look at the ratio between the qualifying and non-qualifying expenditures, which also needs to be calculated on a case-by-case manner, of course. So also project by project, as it needs to make sure that everything that you can take into account is taken into account, but you also do not take into account what should not be taken into account, of course. I think it would lead us too far to really go into the concrete calculation of the tax of the innovation income deduction, especially the nexus. Of course, we're happy to talk about it at another occasion. But I think for now, and in the interest of time, I would like to let's say jump to last but not least in our overview today, which is the tax modulation principle. The tax modulation principle, let's say this modulation principle or mechanism basically provides for an incentive for pharmaceutical research funded via the pharma contributions collected by the government. So basically what happens is that pharmaceutical and biotech companies investing in research, development and innovation activities in the sector of human medicine can obtain, let's say, a reimbursement by the RISIF or INAMI of those costs. So basically what happens is the costs that are coming into play are linked to should be linked to three distinct types of research. When we talk about fundamental research, industrial research, and experimental development, we can take into account, for example, those activities, the research, development, and innovation activities carried out within your company or carried out in the European Union by subcontractors of your company. So let's say you are, active in Belgium, and a part of your research is carried out by a branch of your company active in France. Well, those costs can also be taken into consideration. Now, why do we see, again, different funding rates for different types of research? Well, again, this is linked to the state of the risk levels you can encounter when looking at those types of research. Important, of course, with this principle is the timely application as well. Every year before the 15th of February, the projects to be carried out as well as their budgets must be notified to the INAMI, accompanied by a report from your auditor. So on the 15th of February, what will you hand to INAMI? A very clear file showing which projects you are conducting, the costs that are carried, that you are encountering on those projects, and of course a report of your auditor, let's say certifying that those costs are realistic. The following year in September, the applicant will be asked to report on the activities performed in the prior year. So let's say in February 2022, you will provide to INAMI a list of projects to be carried out. In September 2023, you will report back on those activities as well. Voilà, this is the first one. This for the tax modulation, specifically and very interestingly for the pharma and biotech sector. Now, important, as I mentioned here, and I don't want to leave that out. So as it is, how is it, let's say, funded or financed? Sorry, I was distracted by some comments. How is it financed? Well, so every pharma and biotech company, of course, has their contributions to make to the INAMI or RISIF. Well, that pool of, let's say, of funds is redistributed and then via a specific modulation principle, amongst others, redistributed to pharma and biotech to again boost activities in Belgium. This is actually one of the ways that Belgium tries to stay, let's say, on top of things, or tries to maintain its interesting position for pharma and biotech companies in Belgium.
Thank you for listening to the BioWin Expert Talk podcast. We hope the content was valuable for your business and that it meets your expectations. Do not hesitate to contact the BioWin team if you have any further questions or if you need more information on a certain topic.